Hi, everybody. Thanks very much for joining on the second day of the World Family Office Forum. I'm looking forward to jump into a discussion on a very exciting region in the world, Southeast Asia. We're going to be discussing, what we're seeing in the venture capital market here. And we've got, a very interesting panel with some experts in this area. And the session today is moderated by Arshad Chowdhury. Arshad is managing partner at Betatron in Hong Kong. Arshad, what I'll do, I'll hand it over to you to properly introduce yourself and bring in the panelists.
Okay, very good. Thanks a lot for having us, Alex. I'm really excited about this conversation today. I think it comes at a really timely moment because we're seeing so much activity on my side from the VC perspective in this region. There's a lot to be excited about. I think we all know that many countries in Southeast Asia just have a lot of structural growth, and wherever you are in Southeast Asia, you will hear everywhere the sounds of construction. You will see traffic. You will see young people with cell phones in their hands, many times more than one. Getting a cell phone is really cheap and everybody is connected. So I want to start off with a few things. First, my background is, you might be able to hear from my accent, I was born and raised in the US. And spent the last 20 years in New York, but in the last few years I moved to Hong Kong, specifically to continue investing in the region, in Asia broadly, and in Southeast Asia. In my fund, Betatron, we focus on early stage companies that are scaling specifically in Asia, operating in traditional industries like logistics, maritime shipping, real estate, health tech. And we bring a view of climate adaptation and sustainability to all of our investments. We're also one of Asia's first carbon neutral funds. So in this conversation, the topic of sustainability may come up, and it's a topic that's relatively near and dear to my heart and in my experience. Now, I've been investing for the last 12 years or so in the region, and we've made, with Betatron, in the last 3 years, we've made 45 investments, many of them in Southeast Asia. And I'm glad here to have today with us two other panelists who have much more experience than myself in the region and broadly investing. And so I'd like to start off with John Sharp. John, if you want to give a few words of introduction, and then Aradhna, please.
So Arshad, I was hoping you'd do the introduction for me because sometimes when you talk about yourself for an excessive amount of time, it comes off the wrong way. But broadly speaking, I'm a founding partner of Hatcher Plus. Hatcher Plus is actually a spin-off from the original Hatcher Fund, which we started back in 2013. That's done great. We've doubled our money. We're at a 22% IRR on the fund. It was a small little micro fund, $20 million. And now we've launched H2, which is a $125 million fund. It's a data-driven fund. And what we've done is actually raised about $12 million, which we're spending on building up data models and technology that will assist us to build an extremely large portfolio. We're aiming at investing in 1,350 companies. We're about a tenth of the way there. So we've got some ways to go in the next 3 years. Broadly speaking, the geographic basis for that investment will be around 50% Americas, 20% Europe, Middle East, 20% Asia, and 10% rest of the world, including Africa and Oceania, Australia, South Pacific Islands. We invest, we're sector agnostic in our investments. We're super early stage. We're usually first check-in, formation stage in partnership with leading accelerators and pre-seed VCs. But the great thing about our systematic approach is we see an awful lot of deals. Last year, we saw about 11,000 deals through our platform. We typically select at a 1% ratio. So that means that we'll make 100 investments out of those 11,000 deals. And the great thing about seeing that amount of deals is you get a lot of trending information. You see a lot of information about what Southeast Asia is doing relative to Japan, relative to China, relative to Europe, relative to the US. And that's super interesting from just a standpoint, from the observational standpoint. I'm going to be doing, I'll stop there because I'm doing a keynote after this and I'll be filling in some of the blanks then, but very happy to be here and lovely to be on the panel with you guys.
That's great. Thank you so much. And I'm sure we're going to get a lot out of such a wide perspective considering your deal flow. Aradhna, I'd love to hear from you.
Absolutely. Hi, Arshad. Thank you very much, Alex, for having me here. It's always a pleasure to be supporting you. So, hi, everyone. My name is Aradhna Dayal. I'm based in Hong Kong. I run my family office. We've been running it for almost 25 years now, so pretty one of the oldest, I would say, in the region. The family is originally from India, used to be a large landowning family, and that shows a little bit in our portfolio DNA. So we do about 80% real estate. A lot of our holdings are in Hong Kong. We do everything from high-end residential to commercial to industrial buildings revitalization to agriculture, which we do in Australia and New Zealand. We are hugely impact-minded in whatever we do. We try and support entrepreneurs or build companies, or support sectors which can change the lives of people. It doesn't mean that we're not commercially driven. We are. We've done about 12.5% annualized for 25 years. So we've had a decent track record doing that. But we also try and put impact right, left, and center of everything that we do. About 4 years back, we decided to diversify a little bit from real estate and start looking at the world of tech and how to take our family office forward. I also had my two next gens growing up and realized that they're not going to come back if I don't try and do something a little more exciting. And that's when we started looking at areas such as deep tech, enterprise, SaaS, healthcare, consumer, as well as supply and logistics. And these are the 5 areas that we're fairly active in. We primarily invest in funds because we are still learning, and we're trying to learn how to direct investments through that, and also build our institutional knowledge on the sectors that we want to be long-term partners in. So we like the whole crossover theme from Asia. I think our DNA will always remain Asia. But we do want to partner up with great funds and great companies globally that are looking at perhaps Asian technologies and looking to commercialize them globally, or looking to bring amazing technology, capital, and expertise internationally into Asia. So that's a great crossover, cross-border theme that we like to kind of play. And the other thing that I do is that I am the founder and CEO of Access All Asia. It's what you see kind of behind me. It's it's a fantastic investment club that I started about 4 years back. I realized that as I was looking at investing internationally, equally family offices around the world were looking to invest in Asia, and the club really serves as a conduit, as kind of a trusted network for that cross-border ideas pollination and investing internationally. We have about 350 very close members and affiliates now for the club, which includes some of the largest families around the world. We are all 4am WhatsApp friends, and my husband calls it an expensive hobby. So that's what it is.
Okay, great. And I was looking at some of your past events for Access Alts Asia, and something I definitely love to be a part of. It looks like you have a really good community there. So I want to dive right in, but first want to also define Southeast Asia. And it's something that we panelists just were talking about right before we started this. And my inclination is to be a little bit more inclusive than just the geographic definition, because I see a lot of similarities between markets, like say if we're talking about the Philippines, or if we're talking about Indonesia and increasingly Bangladesh and so on. So the way we look at it at Betatron, at least, is that we look at investments in the region as Asia x China. And traditionally people will say for Southeast Asia, it's Southeast Asia x China and x India. I think maybe if I'm comfortable including India in the conversation. I think China we all recognize as a very different system and its own very big market. So for today's conversation, happy to include countries like Bangladesh, countries like Pakistan and India in the definition of Southeast Asia, because I also understand that to be some of our expertise here. Now that's a very, very large market, right? Traditionally, Southeast Asia is about 670 million people in Southeast Asia, but if you start including Bangladesh and India, then you get well past 1 billion people if it's just East India. And so it's a huge market, and it's a relatively young market. And I want to start there with the opportunity. What do we see happening in Southeast Asia? Why Southeast Asia now? Is there something special that's happening now versus say a decade ago? Why is there so much interest? And is there interest from LPs and from investors and even from entrepreneurs in the region? Aradhna, I'd love to hear your take on what you see in terms of Southeast Asia today.
Yeah, I mean, absolutely, Arshad. I mean, if you ask me genuinely, um, Southeast Asia is just an amazing market that's waiting to be tapped by kind of the global investment community. It's a market that's not been very actively looked at in the region, just because, as you rightly said, China and India were such huge, behemoths that tackling them was kind of the first step for a lot of global institutional investors and families. But if you look at Southeast Asia, as you rightly said, it's home to 800 million people, about 8% of the world's population. And I think COVID truly, I mean, I think it was already accelerating in terms of growth and kind of digital adoption, but I think COVID really has been a game changer in Southeast Asia. We now have 400 million people who are digitally savvy and kind of internet users in Southeast Asia, and 10% of that 40 million have come online just during COVID. So think about that. That growth is phenomenal. You're seeing revolution every space, right? Because as you rightly said, it's a chaotic market. There's traffic, streets are congested. Food delivery is still an issue, mobility is an issue, right? So many people are still non-banked. There are so many real-world problems that are not solved in this part of the world. And think about applying technology to all of that and solving those. That's the opportunity. And I genuinely believe that the next big set of unicorns are all going to come out of Southeast Asia, simply because, see, if you look at the Silicon Valley, you have great technology, solving, issues for a small population. But in Southeast Asia, you can have simpler technologies being a game changer for, almost 1 billion people. And to me, that's true impact. And I feel like a lot of investors look at it that way. And that's why Southeast Asia should be the next stop for everybody, really.
I just want to double click on that idea for a second, though, that Southeast Asia as an opportunity, because it's such a diverse place, as you said, and Singapore is really different than Myanmar. And so I guess if you look at the more developed economies versus the younger or less developed economies, where do you see the opportunity today? Is it to participate in the next big startup coming out of Indonesia, or is it to get in on the ground at a more nascent ecosystem? Where do you see it?
Arshad, that's a great question, really, and I think it very often depends upon your risk appetite and your understanding of the ecosystem. If you're an international investor and you really want to, stay, in slightly more developed markets where the policy is more clear and the go-to-market strategy is a lot more clear and the market is more identifiable, then you can stick to India, China, or even Singapore, as you said, right? Which are slightly more kind of developed, established markets with clear policy direction, etc. But if you're slightly more intrepid, which I think a lot of family offices are, they kind of want to go where no one else has gone before, then you want to be in Indonesia, you want to be in Vietnam, you want to be in Bangladesh, where there's such game-changing stuff that's happening, right? And as it just goes back to my saying earlier, if you look at Singapore, there's a great healthcare system already in place. But if you want to be in a place where there's no healthcare existence and telemedicine is really, a game changer, then you want to be in Indonesia, you want to be in Myanmar, you want to be in Bangladesh, right? Because that's where, those simple technologies are going to be the game changer for so many more people. So I think it really depends on your risk appetite and what you want to do. The opportunities on both fronts, and it's very dependent on the individual investor on where they kind of see, a lot of kind of big changes happening.
Yeah, thanks for that. That makes a lot of sense. And I think it's sort of like a blue sky opportunity in many markets. So John, you have been building, and you guys are building a system that is building a lot of deal flow. You guys are getting thousands of companies from around the world. Are you seeing any trends in terms of the companies coming from, or startups coming to you guys for funding from the region of Southeast Asia? And are there some countries that are surprising you in terms of the growth year on year in terms of the number of startups that might be applying?
Yeah, I think the country that we're probably all in love with the most in the region is Indonesia. Indonesia, I remember I would try and convince my friends in 2005 that they should take a look at China. And they would go, no, really? China, that's the next big thing. And then you try again in 2010 and they say, oh, maybe it's a bit early. And by 2015, that everyone's piled in and you're in a very mature market situation. I see exactly the same situation happening in Indonesia right now, where I find that people that I'll sit next to in New York, I'll tell them about Indonesia and they go, Indonesia, really? Now's the time. And I can imagine in 5 years, I'll be saying, look, you better get in now. And then it will be the 2010 discussion. And then you know, people will wait, and then they'll miss out on what is just a massive opportunity. I love Indonesia. I love the vibe of the place. I love how young it is. I love the fact that it is dependent on, heavily dependent on infrastructure, based on the fact that it's an archipelago, that you know, people are flying, people need internet to communicate. So there's a lot of aspects about Indonesia that are really built for the next wave of digitization and the changes in infrastructure that we're seeing around the world. So I am very, very bullish on Indonesia. I think they're making the right moves in terms of the way that they're approaching changes in, they're not there yet in terms of incorporation and helping startups and funding startups. There's so many more Series A opportunities or investors in Indonesia than there were 10 years ago. I remember going to a Series A conference in Jakarta in 2010, and there were like 3 guys, you know, sitting on panels on the same panels throughout the day. And now you go there, it's a very, it's a very mature ecosystem. A lot of folks making, you know, dozens of deals a year. So for me, Indonesia is terrific. But I would end that comment by saying that the city in the top 10 cities index for 2050, there's only one city in that list that most of us would recognize, and that's Dhaka. And so if you are looking for growth opportunities, maybe it's time to look at Bangladesh. It's time to look at places that people have kind of not ignored, but not really like bit down on. And I completely agree that Vietnam, Bangladesh, Philippines, these places are super interesting from my perspective. But I like this from the point of view of Malaysia and Indonesia put together, and even, you know, Singapore's national anthems in Malay as well, right? That block of Malay, largely Malay-speaking countries, I think is such an interesting block. That sort of Bahasa block, let's call it, is really quite a formidable market and a great market for us to have right on our doorstep. We're very, very lucky.
Yeah, thank you for that. And I just want to recognize Meng Kuok has just joined our other panelists. Thanks a lot for joining us today. I think you're muted. We'd love to, and
late. Yeah.
That's okay. And I understand you are also representing a family office and also are working in health tech with CAMTECH. We're really looking forward to hearing your perspective. If you want to share a little bit more about yourself, please do so now, and then I can go on to ask some more questions.
Sure, yeah. Well, pleased to meet everyone. Yeah, so I started CAMTECH. It's basically a healthcare and health tech corporation, and we are active in diagnostics. We have a lab, research and diagnostic sequencing lab. Yeah, and we also carry out investments in healthcare in the region, out of Singapore. This basically as a strategic investor and also as a family office.
Okay, great. And what we're describing right now is the actual, just broadly speaking, looking at growth in Southeast Asia and some of the drivers of innovation. And something I've noticed is that there's actually a lot of technical talent in the region. And one way that we look at a market's viability for its startup scene, at least at my fund, is we look at how many developers there are represented on platforms like freelancer.com and Fiverr and so on. And I'm surprised to see, you know, the huge numbers of developers that are coming out of Vietnam, that are coming out of Philippines and Bangladesh, and servicing clients all over the world. And I think the interest in owning, you know, equity in companies is a relatively new interest that those developers who have traveled abroad and have maybe come back often carry more so than the average developers there. But I think that's going to change. And I'm curious, Meng, to hear from you in terms of the region. You know, I see a lot of tech talent. What else are you seeing as some drivers of the growth in the region?
Yeah, I think absolutely. There's the tech talent driving it, and tech talent coming out from companies that have been successful in scaling, like a lot of ex-Grab talent on, with from the large tech companies coming out and starting companies. I think also the ecosystem is developing in terms of the angel investors. So we're seeing a lot more individuals writing smaller checks, and a lot of VCs, the VC investments expanding through the A into the B space. So I think there's a bit more of a funding ecosystem, and I think the government support mechanisms are sort of taking effect. So I think we're seeing a lot more interesting companies in the deep tech space, especially in biotech, in healthcare, and also in clean energy and in electric mobility. So yeah, I think we're seeing a bigger range of companies, not just let's say not just in the digital or consumer space.
Okay, great. And there's a wide range of, I guess, sophistication in these markets amongst the entrepreneurs. Some are used to raising money internationally. Many, say in Bangladesh market, Pakistan market, Vietnam market, they're less familiar with raising money internationally. And I wonder if that is going to continue to hold back some of these entrepreneurs in these markets from being able to grow their companies if they don't have the soft skills required to talk to investors and to be compelling. So I'm curious to anyone on the panel, what your experience has been with sort of like new entrepreneurs, new founders who are seeking investment from international investors. What has your experience been? Are you finding that the talent is up to snuff, or are you finding that there's a gap?
Maybe I can jump in here. I think one of the biggest problems that's faced by when you're an entrepreneur here is maybe your reference points of the Valley and press releases of companies that just raised a $20 million Series A. And you're going to the investor, and the investor will say, I'll give you a $2 million Series A at an $8 million pre or a $6 million pre, and everything's completely out of whack with what you're reading about what's going on in Silicon Valley. So I think there's a mismatch. What we noticed when we did our initial data analysis of 600,000 deals is there was a huge mismatch between how people, the terminology that people use to describe rounds. So if you're a new entrepreneur and you're just starting out raising capital, you are in danger of looking a bit foolish to an international investor if you use local terms, and vice versa if you're using international terms for a local investor. So I think first, the safest thing for an entrepreneur to do is really to approach us and say, I'm looking for $1 million. The general assumption by any sophisticated investor is going to be that that's a 20% chunk of equity. That's kind of pretty standard. So at a point at which you say you're looking for $1 million, we all understand what that looks like in terms of deal terms, and we can decide what to call it later. The other thing I would say is that I think Y Combinator deserves an awful lot of credit for having come up with very simple instruments for doing deals, and the evolution of SAFE documents, KISS documents, have just been a terrific boost to everyone all around the world, because entrepreneurs everywhere can get into a very simple agreement very quickly with an angel or a pre-seed or a seed VC that gets them the money without a whole lot of fuss and a lot of delay. So I think that I would say terminology is important. Just for an entrepreneur, they just need to tell us how much money they need, and we'll figure out the rest. And from a documentation standpoint, I think the more all of us shift to using safe notes and accepted very simple forms of instruments, the better.
John, this might be a little bit in the weeds, but I think it's pretty relevant, especially for any LPs, any family offices here that might be making individual investments in companies. Talk to me a little bit about how you think about where companies should domicile themselves. Like, so should a company based in Myanmar be domiciled locally, or should they look elsewhere?
Yeah, great question. So I just did a quick look, a quick refresh before this panel on the amount of business processes you have to go through to set up a company. If you're an entrepreneur in the Philippines, you have to go through 13 steps to set up your company. If you're an entrepreneur in Singapore, you have to go through 2 steps only. In Singapore, it's possible to actually set up a fund in Singapore within a couple of days. So Singapore has compressed the time needed to this very, very short amount of time. And I think that plus the fact that you're in a very clean legal environment, a very grown up financial environment, a very, very easy to understand tax environment for all the participants from anywhere in the world with lots of tax treaties in place. To me, it's a no-brainer that you would set up in Singapore versus anywhere else. I understand there are some nationalistic concerns you have to take into account if you're a billion-dollar startup in country X. But by and large, I think it's smart for entrepreneurs to set up in somewhere like Singapore, where there's a long history of supporting startups, and it's a very good place. If there's any legal disputes or anything else, they get settled very quickly and fairly. So I'm a big fan of the country that I live in, of Singapore.
Aradhna, I see a lot of agreement.
Yeah, sorry, I can jump in and speak for a second on that as well. I completely agree with John. I think such fantastic insights. Thank you, John. I'm actually learning so much, and I'm going to dip into your data set a little bit if you don't mind.
Please, yeah, come on in.
But you know, coming back to your point about talent, here's what I have to say. I was actually very pleasantly surprised, having looked at entrepreneurs in China and India. I actually feel that Southeast Asia has a very large number of entrepreneurs who have done some work or have worked in the Silicon Valley and are coming back. So many of them are actually English speaking and have some kind of a global experience. So in my mind, they were actually a lot more, global LP friendly, than actually entrepreneurs perhaps in China, who really have very often a communication and presentation issue. So I actually think Southeast Asia benefits a lot from that slightly more global entrepreneur that has, and that's probably the second set of entrepreneurs. Probably the early ones were all very, very, homegrown, homebred, which is fantastic as well. But I think that many of them are either taking in partners or, another ideas are being transmitted back in the region from people who have lived in the Valley in the US, Australia, or other developed markets and are bringing it back to them. Actually, many of them who also lived in China and are now coming back and starting similar concepts. So I actually found them to be a lot more easy to talk to, and they can usually explain their concepts and their vision a lot more easily. And I think very often that I've seen, entrepreneurs do in China and India, perhaps. So that's just my take on that. Again, I don't have a data set on that. It's very anecdotal. And coming back to John's point of where you should domicile it, I completely agree. Even we encourage now our India startups to have their headquarters in Singapore. I think it's just fantastic. It's a great regime to be in. And interestingly, Hong Kong is doing the same, right? So there's a huge, support wave for entrepreneurship now in Hong Kong, because particularly after the unrest here, the government understands that, adopting technology, allowing people to start businesses, create intergenerational wealth, and just grow great concepts out of Hong Kong is fantastic. So to that extent, I see a whole interesting North Asia corridor happening, which is Korea, Japan, Hong Kong also, like you can have in Southeast Asia. Same in Hong Kong, you can set up a company very quickly in a couple of days if you want it. With very little, regulatory legal loopholes to go through. There is so much of investment that's now coming from Invest HK, and it's really a hub for international investors to travel as well, right? So you do benefit from that ecosystem also being created in Hong Kong. So I completely agree. It's hugely beneficial if you're trying to attract, international capital to headquarter yourself in a place like Singapore or Hong Kong.
Okay, great. And I want to turn the focus a little bit to something we've just touched on, which is the diversity of countries, of legal frameworks, and so on. So how do we navigate the complexity that is Southeast Asia and Asia broadly? So as an investor, is it wise to just focus on one country that you know well and just invest there, or should we take a broader view? And what's been your, I open this up to everybody here, how do you guys tackle the challenge of complexity in terms of the various regimes, languages, currencies, and local ecosystems?
John?
I can say that we've tackled that by finding strong local partners in all the countries that we want to work with. So our models are quite different than a typical VC. We co-invest with accelerators and pre-seed VCs, which means that we're essentially looking for experts. We diligence the experts, and then we let them diligence the opportunities that they're seeing. So I think there's no way that I could spend years in Vietnam or Indonesia and still not become, and gladly so, but I would still not be an expert. And so for me, leveraging the local understanding, the experience, I'm always constantly surprised when people show me an app or something that's really taken off. There's some cultural aspects to why this took off as a particular style of home banking app or mortgage app or something like that. There's something that they've tapped into in the market that I would not have seen. And so I think it's absolutely critical to have that local partnership and that local understanding.
Yeah, I absolutely could not agree more. I mean, you're right, John, about it. So, Arshad, here's how I think about it, right? And here's actually a lot of international investors also think about it, and this remains a challenge for Southeast Asia. When you look at India and China, they're fairly homogeneous markets, right? You know, either connected by WhatsApp or WeChat. Everybody has pretty much similar kind of, you know, cultural nuances and buying patterns. But if you look at Southeast Asia, this is really a very fragmented and diverse market, right? Each country, whether it's Indonesia or Philippines or Vietnam or Myanmar, they have their own, you know, cultural affinities, languages, you know, policy, you know, just you know, different, just absolute variance, you know, in terms of, you know, how they approach product services, and even concepts like healthcare, right? Like, you know, for example, you could have a very large Muslim population. So then, you know, how do you approach healthcare there? You know, you may have very different, you know, concepts, for example, for women, you know, for example. So, you know, or it could be a matriarchal society. So I think, you know, and then of course there's the matter of policy. So, you know, how does the government view the country? You know, what policy directions is it going in? What's allowed and what's not allowed? And that's often also, you know, determined by religious or cultural factors, right? So, and history, so much history as well, right? So I think that Southeast Asia, when we look at it, this is not one market. These are all very different markets. And we've looked at funds, for example, that do, you know, pretty much all of Southeast Asia. And we pretty much always come to the conclusion that unless you have very strong local roots and local understanding of the nuances, it's very hard to be kind of jack of all trades and be successful. So I completely agree with John that you should pick your markets where you want to be, and you should really invest there along with local partners. So I agree with him. I think Indonesia is a no-brainer. It's a country of 1 billion people. You know, it's got, you know, it's already got a couple of unicorns happening. So I think that there's that culture there. You know, there's a lot of family-owned businesses that can be partners and accelerators for those startups as well, and that can actually use those on their operating assets. So I completely agree. When look at Southeast Asia, go local.
Great, and I guess that begs another question then. When you're looking at an individual company to invest in, and Meng, I'd love to hear your take on this. Like, is it in Southeast Asia, is it a requirement for those companies to be able to expand beyond their local market and service the rest of Southeast Asia, neighboring countries, or are we satisfied seeing companies that can just dominate their local market?
I would always go with companies that can first succeed in their own market. You know, I think that should really be your first word of success and your proof of concept. In your later years, of course, it's, you know, fantastic if you can build an inter-regional business, and that really builds a moat around you as well, you know, in terms of long-term sustainability and competitiveness. But I think it's absolutely important for a company to not start by saying that I'll be in this market and this market and that market and that market. They should start by saying, I'm solving a very specific problem which relates to the cultural, historic, you know, financial issues in my country. Let me solve that wonderfully. Let me become, you know, the leader in that segment in my market. And then let me see how I can have strategic relationships and play it out in different markets.
Yeah, I think I agree with that. I think in a lot of industries or a lot of markets, that's the case. I think the deep tech companies that we look at, I think that there's a need to I think that isn't the same like home ground advantage where you succeed in one market. For instance, if you're based out of Singapore trying to work on a biotech or a deep tech innovation, then I think you're taking a very much export model because it's a very small domestic market, and you've got to then get into the developed markets right away. So I think that back to the last question about whether, you know, which markets it can be in. I think we see that for deep tech, for med tech, biotech or clean tech. I think Singapore is the obvious choice, and we've only looked at stuff out of fear in terms of innovation, technology innovation, because it's the IP infrastructure, legal infrastructure, licensing frameworks, and then easy access to the developed markets, and also you need supportive, government infrastructure or R&D support and R&D grants. Yeah.
I think Meng makes an amazing point there, and that's exactly right with deep tech companies. That's the beauty of it. You can develop them in Singapore, but you can really scale them up globally if you wanted to. So that goes back to our crossover theme that we talked about earlier. If you look at some of the biggest unicorns that are coming out in the US right now in the deep tech SaaS space, they've all been built in Asia, either in India or in Bangladesh or in Singapore for that matter. But the go-to market strategy is the US, because your revenues are just so much more high-end dollar denominated there. So I completely agree. I think deep tech is a great example of where you can go cross-border and crossover.
That's great. And now we have a question from the audience. John Jagir, who's based in Vietnam, says I really agree with John's point on local presence. It is spot on, but the ecosystems are very different in different countries. What are his criteria? So John, what are your criteria for finding good local partners?
Yeah, so we think that it's a much longer thing, but I'll try and answer it as succinctly as I can. So when we're looking for partners, we're looking for people that have obviously done this before. So if you're an accelerator, we're looking for a modern accelerator, like someone that's using similar processes to Y Combinator. We're looking for someone that is well-funded, and we're looking for someone that is an expert marketer in the terms of figuring out how they can get their hands on the available deal flow that's out there. So what we're really looking for is someone that's sitting in Manila or in Ho Chi Minh or in Bangkok or in Singapore that's able to reach out to the world and pull in what's going on in that market right now. All of our analysis shows that basically leading investors, leading accelerators, leading VCs invest at a rate of around 1 every 100 companies that they look at. So 100 business plans come in, you select 1 out of the 100 business plans. And if you're a family office and you're selecting 1 out of 3 and you're wondering why venture's not working for you, there's a good reason for that, and that's because you're over selecting. So what we look for are people that play by the rules with respect to the selection ratio and also have a very strong follow-on rate of at least 67%. So what we're looking for is that they can put together a cohort of 10 terrific companies. Then they can have at least 7 of those companies go on and raise capital at their demo day or whatever the equivalent of that is. So that's very, very shallow view of what we're looking for. There's a number of other things we're seeking, but that's basically it. We're looking for experienced folks that follow those metrics.
Thank you for that. It's such a specific approach, and it makes a lot of sense.
Yeah.
Love that. And I want to talk briefly about valuations, because while we're talking about startups in the region, I've seen, at least in Bangladesh, we have what's called the DACA discount, right? Like international investors will see growth, will see a great team, great founder, and still the valuations are nowhere near the European peers or American peers. So what are you guys seeing on valuations? And typically for like an asset light software-based startup doing a seed round, like what typically do you see as a valuation compared to a peer in other markets, like in the US?
You won't be surprised to learn that we have a metric around that. So the range, so we're first ticket in. So when you get money from us, we're typically matching the investment made by an accelerator or a pre-seed VC. And so just as an example, with some of the guys we're working with in Southeast Asia, in developing markets, frontier markets, that might be a $25,000 check. And with a couple of guys that we're working with in Europe, that might be a $150,000 check. We typically base it on what it takes to get the startup from A to B, and A is the demo day and B is their first real financing outside of that. So it's typically 6 to 9 months worth of funding. And so in some of these markets, 25,000 works, in other markets, 150,000. And so it's that kind of range, and that's just on a very sort of small, relatively small sample size, but that's how we view the world, is basically what it requires to get you from one stage to the next.
Yeah.
Meng, does that resonate with you?
Yeah. Well, I've heard, software startups saying there's immediate, they face a discount compared to a comparable company in the US.
Yeah.
I'm not sure what the metric is. Is it like,
I think it's probably different, Meng, from some of the companies you invest in, which are deep tech, and so you may need to put more money on the table.
Yeah. No, but I mean, I think in general, these startups have complained that they face a discount compared to their peers in the US. I'm not sure if you know the exact figure. I can't remember off the top of my head, but yeah, they said if they were sitting in the US, they would be at a higher valuation.
I would say there's a little bit of a misunderstanding there sometimes, because it's usually the really big deals that get publicized. So when someone does a Series A deal that has a $50 million or $100 million pre-money, people go, how can that be? And that becomes representative of a Series A deal in the Valley. And it's really not true. If you walked around the Valley tomorrow and you did a survey of everyone, you'd find out that's an absolute outlier. So I think it's difficult sometimes because only these really sort of outlier deals are the ones that get all the publicity, and they distort the view of what a local entrepreneur thinks they should be getting for their company.
I think absolutely right.
For a second. Sorry, Megan, go on.
Yeah, no, I think that's quite true. And then there are a lot of companies, out in the Valley who don't manage to raise, and they just they fold very fast. Whereas I think a lot of companies we come across here, they all manage to raise something and survive for some time. So I think it's that's a kind of misconception, as you pointed out.
I would actually say that it's the other way around. I mean, I completely agree. There is an Asia discount put on companies, and you would really want to look to value them kind of lower. But there is actually a reason for it. If you look at a Silicon Valley, it's a very well-developed ecosystem. And if you are a company with really good IP and a strong moat around your business, the chances of getting a follow-on investment from a very credible investor at a decent valuation, and the pool you have to choose investors from is just that much more wider, right? So there's and if your go-to-market is very clear there, it's a developed market, then so I think those factors just kind of come into play. I mean, everybody is taking a little bit of risk in Asia when they invest here, right? So I think that kind of gets factored in a little bit. But I completely agree with John that actually we have seen some very sensible, term sheets and proposals coming out of the Silicon Valley, where if you look at a deep tech firm, a deep tech company, you can still look at a seed stage at 10 million or so of valuations, and I've seen 15, 20 million of valuations. And in one case, somebody pitched me something with a 50 million valuation out of India or out of Southeast Asia. So it really depends on who you're talking to and what their sense of what their product and their technology is really worth. And sometimes it's just inflated by the numbers, the headline numbers that kind of go around. But that's not always the case. I think if you look deep enough, and if you have the right deal flow channels, you can find reasonably valued companies everywhere. And I think sensible investors don't put that huge discount on Asia deals anyway.
Okay, very good. And I want to shift slightly to talk about risk, as you just described, Aradhna. And in my experience, I think I also agree that some of the discounts are warranted for the reasons you described, but also just looking at the unit economics in many of these markets, right? Like if you have a relatively poor population, then you need to be at massive scale and you need to have reasonable margins. So you need reasonable margins at massive scale, and that requires perfect execution. And those margins can disappear if you've got any competitors. So we see that in the ride-hailing space, the delivery space, like all these companies that have relatively low barriers to entry, but then like a lot of money to grow them, a lot of capital to grow them, but then a ton of risk. Yep. And so I think I agree that it is a challenge, which is why we look at marketplaces because they're hard to build. And if you have a marketplace with traction, then you've got something defensible. It's hard to build a two-sided marketplace to begin with. If they've solved the first chicken and the egg problem, then they're onto something. But then if you also have reasonable margins in the marketplace, 6, 7, 8%, then you have something that might even be acquirable, especially if it's grafted onto the local. In the local economy. So I totally agree that there's a good reason for that, but there must be other risks as well. And I'd love to think about some of those other risks. And there's of course geopolitical risk. Like we're seeing the risk that India has imposed many restrictions on Chinese investors. but we're seeing a coup in Myanmar. You're seeing lots of other risks. So I'd love to turn the conversation to some of the risks involved in these markets. So Aradhna, I know you've seen a wide variety of asset classes, like not just venture capital, but Access Alt Asia just does that, looks at alternative investments. So maybe you can describe risks that might be endemic to the region, not just specific to VC.
Oh, to the region as such. Well, I mean, as you rightly said, we are a volatile region. We love chaos a little bit. I think that some countries still have monarchies. Some countries have monarchs who are elected. I don't know how to put it, but so look, I mean, definitely, as you exactly said, I think that policy risk is greatest really in Asia. I think that's what it is, right? It's still a very maturing market. And even to the many of the governments and regulators, many of these areas are new. So how do you regulate it? There's fierce competition between countries as well. So as you rightly said, between India and China, there could be a border tension, and then that could really distill into India banning a whole bunch of Chinese apps or China investments into India. So I think that policy risk, that little bit of political risk is kind of always there. But I also kind of feel that for a lot of global investors, I think the biggest risk that they see to the investments in Asia, Southeast Asia is the exits, right? You can make very good investments, but how do you get your dollars back, right? And I think that, as I always say, you can't eat NAV. You need to have some distribution. So I think that's the huge risk. But again, that's changing, as I always explain to them, not fully, but it's changing. So I think that corporate VCs who are now coming in are a bit of a game changer. So if you look at Ninja Van, for example, I think it raised about 300 million or so in Series D last year. And a lot of that came, it was May 2020, I think, if I remember correctly. And a lot of that came from Grab. So I think a bit, unicorns like Grab, Lazada, Alibaba is what Lazada, for example, right? 2016. So it's this great corporate M&A activity that's happening in Asia within unicorns, within the tech sector. And I think that's alleviating that risk to some extent. I know that Gojek, Grab, Paytm, they're all going to be large corporate VCs like Tencent in the next 4 or 5 years. And that can become a very interesting exit route. But if you look at the IPO markets, it's still kind of small and still evolving. Having said that, I think countries are becoming very smart about it. So I do know about Singapore, Meng, and I'd love to hear about that. But in Hong Kong, as you know, we've created now a star board, which basically allows listing of pre-revenue healthcare and tech companies, right? So that's a new exit route that's kind of, in place now. So I think exits remain a huge risk and a challenge area. And the governments and the markets need to address that for Southeast Asia to become a really viable option for global investors.
Okay, very good. And I think we actually are just beyond our time limit for the panel. So I want to thank everyone for joining today. I learned a lot, and welcome everyone to reach out to our panelists with any further questions. So thanks a lot, everyone, for joining today, and I'll see you at the rest of the conference.